Good morning, traders. Welcome to this live intraday strategy webinar. Today is Thursday, October 20th, ECB day. Michael Boutros here with you this morning, and we'll be monitoring, guys, as we speak. Mr. Mario Draghi is taking to the stage, so we will be tracking his comments throughout the session. Obviously, they did hold interest rates as expected. No change to the purchase target amount either. What we're looking for is if they're going to start prepping. No one's expecting, let me take a step back, that they're going to actually file or say that they're going to make the extension now to the asset purchases. But what they're looking for are clues that Mario and company is essentially starting to prep the markets for such a scenario. Will be able to extend the stimulus package. Again, keep in mind they're basically running out of assets to buy. The capital key would need to change, which is basically the key that tells them what assets they can purchase and what they can't, or they would need to file some sort of extension and move this into another sector. So it's going to be interesting to see how this turns out. We're not going to be following word for word, but I will be giving you highlights as they hit the wires. So, good to be with you, everyone here in the room. Eileen, Graham, Madad, Mark, Pete, Pooja, Rich, Simon, Steven. Not going to get through everyone, but great to see you all this morning. So on the docket, I do want to take a look at, obviously, the 3 euro crosses that we highlighted in last night's update. Euro dollar, euro yen, euro CAD, my favorite of the three. Really like the rebound that we're seeing off of that confluence support, sort of a washout type of exhaustion play that I'm looking for. So we'll take a look at those three. We'll also take a look at the previous night's reports on Aussie Dollar, and Dollar CAD, as well as the Kiwi Dollar. And then we will touch base on the German 30, the DAX, and the SPX, both of which are sitting just below resistance as we speak. So I do want to highlight those levels that we were looking at last week on both of those major equity indices. If we have time, I also want to touch base on dollar yen and Aussie Kiwi. Dollar yen's just been lackluster, guys. It's actually following suit really well. We're getting the pullback we were looking for, but it hasn't really given us too much juice on the downside. It's kind of a slow burner. So we'll touch base on that. Same thing with Aussie Key. Eileen, I know that you were watching that one. We are getting that final, again, pullback off of that major, or just ahead of that major slope of influence on Aussie Key, and continuing to track that one lower as well. All right, guys, as always, feel free to throw out questions or trade setups anytime throughout the session that you're looking at. Just hitting the wires, Draghi says the economic outlook remains subject to downside risks. The ECB, to preserve stimulus needed to raise inflation, says baseline remains subject to the downside risk. ECB policy ensures very favorable conditions. Economy is resilient to global, political uncertainty. Gradual rise in inflation seen. Says QE will run through March 2017 or beyond if needed. Here we go. Says December assessment will benefit from new forecast. The ECB ready to act using all stimulus within its mandate. Council will review committee work on QE in December. And you're looking at a chart, the euro dollar right now. I think you're going to see a lot of back and forth. We're going to want to let the sort of dust settle here before we take anything, but let's jump right into price action. So here's what the euro looked like last night, and I kind of just wanted to highlight this near-term cluster of support. I'm looking at 109.63, which is basically the opening range low for the week. It's the 88.6 retracement of the advance off the lows that we made on the Brexit decline. And just below that, you have a really big fib confluence at 109.36 into 109.30. Just here, you see this? This is a 618 retracement. Bringing that to the daily chart. So this is the 618 retracement of the entire advance off of the lows they made from December. And it's also the exact 618 extension of the decline off of the highs. Add to that the slope that we've been following for the last few months here. Median line comes in right there as well. So that's sort of the major support barrier for me that I'm looking for on a euro dollar washout. Beyond that, the last sort of major key slope I would be looking for, a major key support, would be the 2016 open. That takes it down to 108.72. Also ends up being a pretty significant weekly close. Jamie was highlighting in the webinar yesterday. Also on the near-term chart, which I'll show you in a moment, you had some slope down here. So any way you slice it, even if you extend a parallel just off that low that you made from August, any way you slice it, two levels of extreme importance that I'll be looking for if we get the washout lower. Both levels of which I'd start to look for possible exhaustion. Major resistance, the major resistance isn't all the way up until 110.83, 110.66, this region here. Former slope support, off the lows, turned resistance, the 50% retracement of that same range we were just talking about, and it's also that Brexit low day close, which we still haven't cleared those lows. So the close of that session is level I want to watch, and that's that 110.83 region. So the level's pretty clear. See if Mario has anything new to really offer the markets here as we go on. It says the risk to economic outlook still tilted to the downside. It says sluggish pace of reforms also a risk. Low oil prices, job gains provide support for consumers. 10, investment supported by favorable financing conditions, and says domestic demand supported by policy pass-through. So sees moderate, steady pace of growth. So a little bit more of a cheery kind of status quo. No signs of convincing upward trend in core inflation. That's a concern that we've been seeing from central banks around the world. And he says that inflation is to pick up in the next few months. So nothing new here from Draghi. You're seeing the euro with some back and forth action here. Again, if we get that washout, look to 109.36, 109.30 as initial support. No taper talk, says Eileen. Yeah, no taper talk. You know, it was really surprising. I was talking to a couple of guys here in New York, and there's more than one person who was talking about this taper idea. I couldn't see the logic behind it, right? Not right now. But in any event, here's the near-term chart for the euro dollar on the 4-hour chart. Again, here's your weekly open. And as I highlighted yesterday, let me bring this to a 2-hour. Your weekly opening range was pretty well set. Okay, I know we slided down, kind of probed below it in overnight trade, but broadly speaking, you haven't even gotten an hourly close. It's a 2-hour below this region. You're looking for a break of the weekly opening range. Again, a washout level, 109.30, 109.36, and there's that key 2016 open, 108.72. Okay, on the near-term resistance, 110.26 is the weekly opening range high, and again, there's that critical resistance range, 110.66, 110.83, and that's going to be the level we'd need to clear to mark a full-on reversal here in euro. Any questions on the euro levels? Eileen says after U.S. elections, maybe. We'll see. Yeah, we'll see. I'm sure you guys caught that that debate last night. So what's the game plan moving forward for the euro? I'd say this, guys. I wouldn't want to touch it right now. I want to see what the press conference has for us. Is there a press conference later? Wes, it's going on right now, man. I'm getting you highlights. That's what I've been reading to you throughout the session. He's speaking as we're going on, so I'm kind of walking you through it. But once we clear that, I want to get to the end of that, because the Q&A session is sometimes where you can get a lot more information out of them. But once we clear that, I'll be looking for either a washout into that 109.36 initially to look for some resistance targets or resistance triggers, or that 108.72. Okay, I want to see a reaction. So when we get down here, I don't want to dilly-dally. I want to see a strong reaction. If not, then look down here. Or if we get a rally back up into that 110.66, 110.85, I'd be looking for an exhaustion pullback, and I'd look to play the short side there. Either way you look at it, though, you're coming into, you know, some pretty significant levels. Make sense? He says, got it. Thanks. Hey, more than welcome, Wes. Conwall, great to see you in the room. Presser is not on the FXCM calendar. Yeah, sorry about that, Eileen. I told you yesterday that we had it in the update, so keep in mind that presser is always the matter. It's not like the Fed where you only have it on the quarterly, guys. The ECB does it. You know, every single release you get that presser with the president. All right. Initial suspicion here is that we'll get the washout lower before it does rebound, but look at those targets at 109.30 and 108.72. So that's euro dollar, number one on the docket today. Draghi urges other policy actors to contribute more decisively, says inflation must return to target without undue delay, and says must preserve substantial monetary support. The BLS indicates improvement in loan supply demand, but ECB measures significantly helping credit. It says all euro area countries need structural reforms. And here we get into the fluff part. There's nothing here that's going to move market. So let's wait and see what the Q&A has for us. In the meantime, Euro Yen is another one I was looking at last night. Also highlighted this piece on Daily FX. Again, Euro CAD is my favorite. We'll go over that in a moment. But here's what Euro Yen looks like. I know we were talking about this in the webinar, and I kind of did some work on this last night for some time. Who was it here in the room that was asking about Euro Yen? Can't remember last week. But here's what it looks like right now. So look, we broke back below the monthly open. We kind of pivoted back above it right now. I just want to highlight some major things on the daily chart. I don't really have anything to play with this on the short side for the euro. Very similar setup that we're looking at with the euro dollar. So we're looking for that pullback to get even a deeper stretch into some exhaustion low, or a rebound higher near term to get us back on the short side for that last stab. Here's what it looks like. Here's your monthly open. We did close below it yesterday, so it does technically shift the focus to the downside. And we came off of a pretty big support target as well. This is the 618 retracement of the decline off the post-Brexit high. Here's your Brexit low. Here's your post-Brexit high. The range of that gives you 618 retracement right here at 116.02. You also have basic trendline resistance back to the yearly high. So here's your January open, January high, resistance, 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 resistance. Add to that, you have the 100-day moving average, which right now slides right in there. Okay? And you had a really strong reversal off 16 momentum. So it shifted the focus to the downside. I still do think you look for a deeper cut, but I don't want to get aggressive. I'm actually looking for some reaction down here. Just a little bit lower, and I'll show you the intraday chart in a second. You have a long-dated ML formation. This is off the 2000 low. Let me zoom this out for you to give you a little bit better of a picture of where we are in trend. So if you take down all the way to the 2000 low, the high that we made up here in 2008, the subsequent low that we made in 2012, this ML formation has been pretty decent, catching some pretty decent slopes here. Okay, there's the resistance highs that we caught back in 2014, right ahead of 2015. There's a nice pivot right there with the lows that we made right here. And look to the left, catching that. Okay, so the point being, that lower median line parallel, extending off the lows from 2012, is basically what we've been bobbling off of for the last couple of months. It's right here. Once, one probe below, two probe below. If we take a trend line just attaching those lows from July and September, also converges there. Add to that the descending slope that we've been following off the highs, okay? That lower parallel, which was been broken but has been a very nice pivot, so instant support, break, resistance, break, support, resistance, 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 a little messy, but that converges on the same region. So you all get the picture. Big, big, big support. If you take the September low day close, that comes in at 112.26, and that's sort of the risk. The short side bias, as I was noting yesterday, is at risk while above this. Okay, inevitably we would need to clear that 100-day moving average, 2016 trendline resistance, that region up there to really validate a full-on reversal in euro yen. Here's what it looks like on the hourly. All right, so we're getting actually a really strong reaction on the euro crosses in general here. Draghi says ECB didn't discuss QE extension beyond March today. Okay, there it is. The extension concerns that we were looking for, or the extension details, weren't discussed amongst the committee today, it says. So that's offering some support here for the euro. Obviously, guys, if they're going to extend QE, all of these are euro dilution measures, which would tend to weigh on the euro. So the fact that they're not talking about the extension at this point means that they're unlikely to do it at the next ECB meeting. They would be looking to prep markets if they were going to be doing that. So certainly you're seeing the euro with some strength here. Near-term resistance and bearish invalidation being approached right now at the weekly open. Weekly open here converges on basic slope resistance, nothing special. Okay, so here's that target that we highlighted in yesterday's piece on euro yen. We're right here. Okay, so watch for a break above this. If we clear the opening range high for the week, that's basically a reversal signal, guys. You're looking for 115.05, and again, the 115.05 level is basically this. Okay, I don't have that long 2016 trend line in there. That's what it looks like. It just kind of makes the market pretty, or the chart pretty messy, but you get the picture. So look for some exhaustion near these levels here on euro yen. Okay, so that extension comment really hitting all the wires. Also, here we have Reuters, or excuse me, this is Dow Jones feed saying that the focus should be on actions to raise productivity, no discussion of extending QE measures. Policy support in place is extraordinary. Policy can't stay in place forever. So certainly prepping the markets that essentially they're not going to keep these extraordinary measures in place for a prolonged period. Draghi says ECB took stock of ongoing technical work. Draghi says the ECB held seminar on options on QE tweaks. ECB will look through blips in data. Extraordinary policy support won't exist forever. Okay. All right, so sort of a little bit more of a tepid tone here with regards to any upcoming changes to the stimulus measures that are currently in place. Might be a decent opportunity to fade here near term. Heading into the U.S. Open, guys, watch the opening range. I like where that capped out, okay? Just resistance, near-term bearish invalidation level, right there. See if that holds into the U.S. Open. Any questions on euro yen as things start to pop off a little bit here? Okay, that was number 2. Euro CAD up on tap. Yes, Conwell, we'll take a look at crude in just a moment. Let me jump through the euro crosses as they start to move here. I'm suspecting euro CAD actually made the entire move I was looking for. Let's see, where is it? Euro CAD, Euro CAD. Yo, okay, right into 145.16. So that was the target, the initial target from yesterday's piece. Here is 145.07, 145.16. So the premise of the trade was this. The rebound that you made yesterday was pretty insane on the BOC. Now, while you saw the CAD rally initially, the Loonie rally, initially slammed this thing right through a major key support, we closed the session well above. The reaction at the lows that you saw from July was very strong and sudden. And the low that we made was not random. Even within the confines of the near-term descending formation, it was at slope support. So all of these things put together, add to that we've been marking some divergence, shifted the focus, at least in my mind, to the upside, which is why I was saying as long as we stayed above that 143.80 level, basically you want to see that low preserved. You're looking for targets at the median line and up at 145.16. So both of those at this point have kind of been taken out. This is the near-term bearish invalidation level. Notice the slope resistance that we had experienced there last week. And if we do topside break that, you'd look for 146 essentially, and the upper parallel up as high as 146.50. So really clean levels, and the reaction that you saw at support really welcomed here. Again, here's what it looks like here's what it looked like yesterday in the 240 minute. Here's what EuroCAD looks like now. Wes, you know what? That's interesting. I didn't take a look at Euro Oz yesterday just because of where it was positioned. I'll take a look for you for sure. Let me jot that down real quick. We can take a segue if we got time. Euro Oz. Any questions here on Euro CAD? So from this standpoint, again, this is the slope, again, that caught resistance last week. So now heading into the U.S. Open, if you're not already holding any positions on this, you want to wait for a setback, a test of the median line, or maybe back even as low as that sliding parallel there, which would take you basically into the weekly open. You want to stay constructive above this region. Okay, topside target still unchanged, 45.95. The upper parallel here backed closely by the 618. Keep in mind where we're coming from. Here's the daily chart. Here's what it looked like yesterday. Major support extending off the December low, touched again in April, touched again in June, touched again in July. The lows from last month all converged right here. Questions on Euro CAD before we move off? Draghi says an abrupt end to quantitative easing is unlikely. So softening the tone here and backpedaling a little bit. Draghi says ECB briefly discussed negative rates. Okay, so here's the door open for additional easing measures. Says abrupt end to QE was never discussed. ECB hasn't discussed stock flow issues of quantitative easing. Council hasn't discussed a December agenda. Says low rates have worked. Negative rates don't hinder policy transmission. And the ECB briefly discussed negative rates. So while they didn't discuss the extension of QE measures, he's saying that QE, an abrupt end to quantitative easing is unlikely. So they're going to be looking to do a slow taper is basically what he's prepping the markets for. Oh, these central bankers. King of the backpedal. Let me just drop a comment. 2 sentences later, start to backpedal a little bit. Unbelievable. It's a perversion of the markets. In any event, the euro pullback is materializing here a little bit. So really good area of where we turned. Let's see where euro dollar turned real quick. Okay, that's a failed break of the weekly opening range high, we'll call it right now. So levels unchanged, okay? Okay, so that is Euro CAD, number 3. I want to take a quick second. I guess, are there any other questions on Euro crosses? I guess I can take that question for you right now, Wes. Euro Oz will be number 4. Here's what Euro Oz looks like. I haven't actually checked it out today. Okay. So this 42.18, 42 handle basically represents 100% extension from the decline off the high. So 2 equal legs down from the high that you made back in September. So Wes says a rebound from 142. Just shorted Euro Aussie at 144. Nice. You're about 50 pips up almost already. Almost wanted to buy at 142 last night. Yeah, I mean, sometimes you can catch that falling knife, but it's always a gutsy call. You know, I can't advocate for it, and I don't want to deter you if you have the if you have the kahunas for it, Wes. But not the best type of strategy per se, right? Listen, near-term momentum. Yeah, it didn't even give you any divergence or anything. The only thing he had was a resistance trigger break here. But look, he says, I'll get to the commodities for sure. Almost wanted to buy at 142. So here's what I would say. You're making an outside day reversal off support. Typically a bullish reversal signal. Outside day, again, taking out the previous day's lows, taking out the previous day's highs. These are occurrences that when they happen at resistance, like we did here with this outside day reversal back on the 15th, which was the high, tend to be important. When they happen mid-range within the confines of the trend, not really something that's going to give you too much information, but off support, sure. Now the validity or how strong this support structure is, and if you take some slopes off that peak low, it actually does give you a little bit of a touch there. Give me one sec, Wes. Let me just check this out real quick. All right, I remember this slope. Okay, cool. So this is what I would say for Euro Oz. Obviously, the Aussie, which you were going to go over right now, is sort of doing its own thing, and it's sort of making a pretty big deal outside day type of play here as well. Here's an outside day reversal in Aussie dollar. I'll come back to Euro Oz in a sec, Wes. The Aussie dollar right off resistance. Okay, so the fact that we're doing this on both Aussie crosses and on a failed break or failed attempt again to get above that August high day close, we've probed this August high day close on a closed basis. We've been unable to close above it nearly 7 or 8 times before yesterday finally did. On the onset of that, to make an outside day reversal like this, that's pretty bearish. Momentum, failure to hold above 60. So there are a lot of near-term signals that are suggesting that you're seeing some exhaustion here in Aussie dollar as well, Wes. So I do want to be cautious about getting too aggressive on the short side of Euro Oz, because if the Aussie's pulling back, we're already seeing that the Euro's kind of primed for some strength. We're getting a pullback here, which was a nice fade opportunity, but there's nothing to suggest, at least in the remarks I've seen so far, that we should be rushing to the exits on the Euro just yet. Some headlines now for some reports coming out. ECB did not discuss winding back quantitative easing measures, and that's kind of the takeaway so far. ECB didn't discuss extension or tapering today, Draghi says, and that's going to be the headlines that they're going to run with. So for the euro, the implications are mixed. I'd still rather be looking at Euro CAD. For Euro Oz, to get back to this, the outside day reversal here again gives a suggestion that you're seeing some blow off. I think you can get a little bit higher, back to the low day close from August, which would be that median line again. That'd be kind of like right here into this region. Keep in mind the weekly opening range high comes in right there as well anyhow. But that's all to say, for me, Wes, if I was you, again, I don't want to deter you from your trade there. If I was on that trade, I'd at least have something at break even at this point. I really wouldn't have to stop anywhere in the loss, just because if it does mount a break through that high at 44, you're probably going to see this thing run right through the weekly opening range. Makes sense? Thanks for the warning. We'll wait to take profit at 142.80. Yeah, 142.80 would be a swing low. If you want to get real near term with it, kind of your go-to is usually just a half of the move. And that gives you 43.05, which is a pretty nice, decent support pivot we just made off of, right? So just ahead of that target, watch that. 618, I bet you is 42.76. Yeah, that's just below your target. So a nice range, just to be mindful of where the thing could find some meaningful support. But that being said, just keep in mind that, this kind of daily candle typically is going to be in a little bit of an exhaustion blow-off recovery before it moves lower. You got it. My pleasure, Wes. All right, so that is Euro Aus. Any question on the Aussie dollar? We touched on it real quick, but for the Aussie, pretty big deal here. Remember, we were waiting for resistance up here. I was really looking for a hold here yesterday. And if you look at the daily chart, it was also, again, basic trendline resistance off the highs. You had that August high day close, a lot there. So once that kind of popped through yesterday on the close, I just sat on my hands and gave up completely on the Aussie. Now, you know, here's the reversal right ahead of the 2016 high day close, major critical resistance. So I'd be looking for a little bit more of a pullback here. You have the weekly open, which comes in at 76.20. If we break lower, near term, you're still looking at this key range of resistance. No change on that front. Okay, that's 76.90 essentially into the 77 handle. Nice divergence into the highs that we made here too. Questions on Aussie. Number 6 is dollar CAD. Here's what the loonie looks like heading into the U.S. Open. So the BOC didn't really do much as far as changing policy, but the outlooks have changed. We certainly saw some downward revisions to the GDP outlook for the next 3 years, a little bit of a softer tone, and the dovish tone in general certainly saw the initial fake out on the hold and then the reversal, just probing below that near-term support confluence we've been talking about at 130.25 into 130.30. So again, a 1618 extension off the high. This is just a very decent pivot in price that we've been tracking at 130.30, and slope support, obviously, which we probed through, then reversed higher. For dollar CAD from here, I think, again, you still get a little higher. This is an objective break of the weekly opening range. 132.35, an area of interest for me. The upper parallel, this is a basic 764 retracement of the entire decline. And if this is going to be a legitimate break of the weekly opening range high on a reversal day, then yeah, look for that exhaustion or a little bit more of a probe higher to possibly look lower. At the end of the day, we're still within the confines of the same formation. There hasn't really been anything to invalidate the downside play. I just think the recovery has a little bit higher to go before you start to look lower again in dollar CAD. And that would kind of sort of work out pretty well with the Euro CAD at setup as far as CAD weakness near term before it's starting to mount a little bit more of a rally. Any questions on dollar CAD? And those levels remain unchanged. The only thing I added here, guys, was that 764 retracement. Now that we know we've made a concerted low, just go ahead and tack on that retracement from the decline of last week's high. That gives you 132.73. 132.36. Just making up numbers, guys. It's Thursday. All right. After dollar CAD, last but not least, before we jump into your questions here, Kiwi dollar is going to be number 7. Here's what Kiwi looks like. We're coming off resistance near term. We've been tracking Kiwi, it seems like, really, really closely for the last couple of weeks. Where's the last Kiwi update? Here we go. And here's what Kiwi looked like to start off the week. We were pushing into that 71.75 target. I was looking for a high there. If you guys remember, I actually had a short on when I wrote this piece. We took a little bit off at, I think, 15 or 18 pip profit. Then it got stopped out at break even on the rally. 72.18 broke. 72.54. Here's what Kiwi dollar looks like right now. We're kind of struggling right around that level after tagging it last night. So you can see right into the upper median line parallel. Just turned ahead of that. You also have the monthly open just higher. Okay. and that soft target at 72.54, which we took out last night. Keep in mind you're marking some divergence all into these highs as price action is making a higher high, series of lower highs into a support trigger break. So I do think that you're seeing waning momentum here. Heading into the U.S. Open, I would be looking for one more stab at the highs with a break back below the Asia lows here in the the European lows and Asia lows at 72, basically shifting the focus lower. Okay, so you're coming into structural resistance. Here's what it looks like on the daily chart. And again, here you have the monthly open, the upper median line parallel, and both of those converge right there. Could offer some more kickback here on the Kiwi rally. So long bias is at risk below the monthly open. So I'm essentially looking for exhaustion short triggers well below that monthly open. All right. Any questions on Kiwi? He says, I got out of Euro Oz. Thanks for the advice. Hey, you're more than welcome, Wes. And again, nice trade. Nice trade. Going once, going twice, sold. All right. It's the end of Kiwi dollar. Bottom line, looking for a stab higher here to try to see if we can get it to a short position on that waning momentum. Let's take a segue here and jump into the commodities here. It looks like Conwall is involved in a couple of things. He says, silver, any level to go long or short. Conwell says, sir, crude, I shorted at 51.66 with a target at 50.86. I want to long. Any advice? Okay, so let me take a step through here because you have a lot of different requests. Let me do one by one. Here's what crude looks like first. And I do want to cover the indices, guys. Very important before the session's over because I think we're coming in some interesting levels. So here's what the crude trade looks like. And obviously, again, that break of the triangle formation that we were talking about, that wedge consolidation, broke. You're not coming into it to check it back as support. So watch this region right here. On the daily chart, the implications are for a little bit of an exhaustion trade here as momentum again was making divergence. Price action pressing into a fresher high, the oscillator making a lower high. Both under 70, that's a pretty decent signal. So look, you know, it's an inside day. It could be sort of a waning momentum pullback. At the end of the day, near-term support, still 50-40. 50.41, which is the high day close. Let me put that here. Right here, okay? The weekly open is in there anyway as well. And the broader bullish invalidation, in my mind, is still down here. There is a new slope I added here, Conwall. I think I was talking with Jamie. I think he pointed this out, and it actually works really well. So this slope off the low, if you make a modified shift formation, okay, gives us a really nice touch here, or turn just ahead of, and the slope tends to work really well, okay, especially when you zoom in on the near-term price. So within the confines of this one, which is what we've been following, and the broader one from 2015, which we've been following, long story short, they all come in right here. The 50 line, the 786 basic retracement, which doesn't really matter at this point because we kind of cleared that highs, but the lower parallel of the embedded structure, a sliding parallel off the lows from late September, all converge right here. So at least the levels are pretty clear here on crude in my mind, Conwall. Sir, oh, the next comment you had here is, sir, with the help of SB Trade Desk, I played the ranges of crude nicely. Oh, well done. He says, thank you. Thank you. Now I'm trying to play silver also, but the range is also very tight. Once again, thank you so much. Hey, more than welcome, Conwell. I appreciate that. Well, if there are no other questions here on crude, I'll move into silver. Any other questions here before I move off? You're seeing some exhaustion. You know, if anything, I'd say it's still primed for a little bit more of a pullback. Inevitably, I still would want to buy that dip. but it could be a very simple 1, 2, 3, 4, 5, which would suggest the impulse is kind of running its course, and we might be in for a little bit deeper of a correction towards lower parallels, which for me, obviously dependent on time, but for me, this is sort of the initial support. A break below 48.98, this region would suggest you're in for a little bit deeper of a pullback before getting long, but definitely looks a little tired here. For silver's part, here's what the silver trade looks like. Yeah, it's super tight. And listen, Conwall, when the markets do this, man, it's just best to kind of sit it out and let the range resolve. If you want to intraday play the range, which sounds to me what you're doing, I'd be watching this consolidation pattern. Just kind of watch this high here. You know what I mean? But no change here. This is still pretty clean. So here's the silver chart that we put together in the webinar the other day, Conwall. No change to any of the levels, man. I completely understand your frustration. It is an exceptionally tight range, but you're coming off support, and it's consolidating. And the major key break is still along this parallel. So just take this and kind of extrapolate that now. Again, now it starts to highlight 1740 even more so, which is the exact confluence of the 100% extension from the decline off the highs and the 50% retracement from the ascent off the lows. So a big, big region of confluence support. And now, within the next couple of days, you got a whole host of things that are stacked up right there at that 1740 level. Also keep in mind you have the 200-day moving average just lower, which literally caught the lows for the month. So for me, I'd be looking for this range to resolve itself before taking any type of stern approach. Again, if you put a gun to my head, I'd be looking to sell rallies, especially sub 1840, 1827. This is my near-term bearish invalidation. All right. Wes says, I've been playing silver intraday as well, but hard to make significant gains. Yeah, Wes, I hear you. It's, guys, we got to know where we should be expecting volatility and where we shouldn't. I got no problems with playing the tightest of ranges. I've done it myself. Sitting on the trade desk for all those years, you kind of get bored even when the market's really quiet, and you learn to kind of pick off those ranges. That's fine. But anyone who's taking a little bit more of a stern stance here on silver, I just don't see it yet. I just don't see it. This could resolve itself in either directional break. I do think the broader decline is still underway, but near term, you're into big, big support here. So does it want to rebound first, kind of clear out those shorts before it turns over? I don't know. All I do know is that the broader focus still remains weighted to the downside. We're just coming off structural support. Actually, if I take this pitchfork and copy it to the daily, kind of gives you a little bit better of a picture of where we are. Big, big region. All right. Any questions on silver? Going once, going twice. We might as well touch base real quick on gold. So we did crude was number 8. 9 was silver. And 10 will be gold. Just to touch base real quick, it's the same exact boat essentially that you're looking at with silver, although I don't really like the near-term chart as much. Here's the slope we're working with here that we highlighted yesterday, and the support structure isn't quite as clean. Okay, it's still the median line extending off the lows from the 2015 calendar year, and more importantly, this median line structure. Okay, you can see that median line comes in right there and caught those lows, and a 38.2 retracement off the low from December. So you had that nice break. The difference between silver and gold is that gold looks like it's made a little bit more of a definitive break to the upside than silver has. So a little bit more upside in gold would do us well. I think back into like 1280s, 1283, the upper parallel here would also take us back into former lower median line support, should now offer some resistance. So still looking for a little bit of a slide higher in gold, but largely speaking, same boat. Okay, you're looking for a broader rally to sell. The broader trade still remains weighted to the downside here. Okay, thank you. We'll wait. Are you waiting for 1655 in silver? Conwall, I wouldn't want to say I'm waiting for 1655. I think if you finally clear the 200-day moving average on a close basis, you can get some shorts into that region. 1650, 1655 is huge. This is big. It's the 618 retracement of the entire advance off the lows they made specifically last year. You also have that major swing high that we probed into back in October of last year, so some nice symmetry even in time. And that converges down here on the lower parallels heading to the close of the month. So if we break this key region, absolutely. I'd be looking to sell rallies into that support structure. But for me, on the near-term approach, guys, trading is an if-then statement. You know, there's conditions. If we break a key support, yeah, I'm looking, my short bias is in play. I'm looking for short triggers. I'm looking for rallies to sell. If we break resistance, great. The bias is validated. I'm looking for pullbacks to buy. Until we do that, as long as we're in the consolidation pattern, you're trading a range strategy. That's just the way I approach the markets. I don't want to front run the break, because guess what? If the reversal is on tap and you still need a little bit of rebound off support, you're going to get smoked. And at the same time, do I want to sell into support? Probably not, right? I either want to be near resistance or I want to validate the break of that support. So yes, to answer your question bluntly, if we do clear the bottom of this range, of this key support, sure. 1651, 1635 is going to be the first target on tap. All right, a quick jump into the indices really quick. I just want to show you the daily charts for the DAX and the SPX. Here's what the DAX looks like right now, heading into the close of the week. You know, we put out this chart a few weeks ago, I think, at this point, and the levels remain exceptionally clean. Here's what the daily chart looks like of the DAX. Major key resistance at the 2016 open. You have the high day close that highlights 10,688, 10,730. As resistance. Keep in mind this is the monthly opening range high, and the lows come right in line with the lower median line parallel that we've been following off the low from June. So this thing is primed, okay? As volatility continues to contract, it looks like it's making a topside break here in momentum. I don't want to stress it just because you're not really seeing the run in price, as well as the fact that these momentum breaks, it's not a break of resistance in price at the same time, something's up. So I'm looking for this consolidation here to finally give way. Targets are super clear. If we clear the high day close, you're looking for a rally up into 10,953, 10,983. Got the median line in there too. If we clear the parallel to the downside, initial targets, you look for that 100-day moving average, but a basic 38.2 takes you down to like 10,182. So that aligns pretty nicely actually with last month's low as well. So the levels are really clear. Again, patience pays. And I'm, Wes, you took the words right out of my mouth. He says, I was too impatient. Oh, you're talking about a Euro-Oz position hot at 128. Yeah, shoulda, woulda, coulda. Listen, profit's a profit. Conwell says, I got it. Thank you. You're more than welcome. Conwell, appreciate that. Any questions here on DAX? I mean, I'm not going to lie to you guys. I don't really like the market right now. You know, I've been very sparing on trades today. I think, or this week, I think total this week, I only have like 5 scalps in. So that's a light week for me. But, you know, when the market provides, it provides. When it doesn't, I'm not going to force a trade. I'm not going to force a trade. Euro with a reversal now, taking back all the gains that you made on the back of or pre-ECB. Looking for that low. Again, 109.36, 109.30, that initial target that we're talking about coming on tap. And again, 108.72, really the washout play if this thing does break down with a little bit more fervor. That's euro dollar. Here's euro yen. As per what we were talking about earlier, taking back all those gains. Look for that major key support just down lower. Euro CAD, I would suspect, is coming off resistance with a little bit more fervor as well, heading into the US Open. Here's what that looks like. And here's a nice pullback there. So for Euro CAD, look for that move back into that 143.80 level. Okay, it's the weekly open here too. And the slope that we've been pivoting off of since the decline off the monthly highs. Okay, we went over DAX. Really quick run around again. As far as the equity markets are concerned, look for that key resistance here in the DAX and look for a resolution of this consolidation range. For the SPX, here's what this looks like. Very, very similar in that the levels remain completely unchanged from last week. The rally failing again at the August low day, or the August low, excuse me. And you also have the median line here, which is continuing to cap the advance on a closed basis. So look for a clearing of this range, both the DAX and the SPX coming off resistance near term today. So that was number 11 and 12. Dollar yen looks like this. As I mentioned earlier in the session, real lackluster so far, but the pullback did materialize, taking out 103.54 and 103.35. I actually did have a short on this, and I took the limit at 103.55, so I forewent, or I missed out on the continued decline that we saw here into the lows. With the rally here, again, has me looking for still more near-term short triggers while below 104. So if we do get another opportunity, I'd like to play one last move here, looking for at least a drop into 102.90, the lower parallels, which should offer us a little bit more of a position to get based on the long position, again, for dollar yen. Broader focus remains higher. Here's the daily chart, pretty clear as far as the level is concerned. Looking for this pullback to offer us some nice entries back on that side. Still think it moves lower before we move higher, though. Questions on dollar yen? That was number 13. Real quick look at Aussie key before we wrap things up. Here's what the Aussie key looks like. Well, we turned ahead of that major slope of influence. It's been a choppy decline, but a decline nonetheless. We've been selling rallies. We've been getting some decent pullbacks here. Inevitably, I'm still looking for a touch of this median line, which has offered some really nice support so far on the pullbacks. That still takes you lower from here. The January low comes in at 105.43. And now that we've kind of made it confirmation at that peak with the break back below the 2016 open, here's what the retracement looks like. Oh, it's there already, actually. Let me just bring up the 38.2. 105.63. Don't really like either of these levels right now. Hold on one sec. Let me just see what this extension looks like. Boom. How about that? We won't use either of them. Don't worry about the July low or the Jan low at this point. Boom. Okay, that's 100% off the high. So 2 equal legs down would take you right there. Actually, a really nice slope here. So no change to the levels here. For those of you who've been following this one, you're going to stay bearish sub 106.60, looking to sell rallies well below that yearly open, near-term support, and a little bit more of a critical support barrier is at that touch line that we were talking about, 105.51, 105.52. That's where I would start to look for a little bit more of a stringent support. If the broader uptrend still is in play, that's the first level you'd want to see hold as support. So I'll be looking for possible rebound off that region. It's number 14, Aussie Key. Any questions on Aussie Key? The return of stronger volatility or I should say, an upsurge will return. So if you've been kind of hating these real tight ranges back and forth, expecting to see that change heading deeper into October trade here. So 109.30, 109.36 initial support here for Euro. Heading into the U.S. Open, you got about 4 minutes. Watch for a reaction at this level. Like I said, if you do see a washout lower, 108.72. Last-ditch effort. If that gives out, Euro is likely to see this thing fall apart pretty damn fast. So keep those levels in view as we head into the U.S. Open. Guys, we'll go ahead and wrap things up here. If there are no other questions, remember, we'll be back on Monday morning on Daily FX for the public webinar, and then right here again next week, Tuesday, Wednesday, and Thursday for normal scheduled scalp webinars. Heading into the end of the week, there's not really anything major I'd be too concerned about, okay? The Euro is probably going to get wicked again as we open the U.S. session, but event risk is pretty limited for now. Especially when it's the end of the month, trading gets difficult. Completely agree with you, Conwall. And don't forget that heading into next week isn't technically the end of the month. We do have Halloween is actually on a Monday, so you don't really start to get those end-of-month flows just yet. But yeah, that's a concern I'd start to look at heading into Thursday and Friday of next week. All right. All right, guys. Best of luck trading. Enjoy your weekend, and I will see you next week. Cheers.